I have a friend who once bought a car for 500 bucks. Now, you don't get a whole lot of car for 500 bucks. And I would say for most people, when they're buying a car, they're looking at the right mix of price and features. When it comes to mortgages, it seems like everyone's obsessed with interest rate. They seem to forget that the interest rate is one line in their mortgage contract. And mortgage contracts can be radically different from one lender to the next. I'm going to let you know a little secret. In today's mortgage market, it is really easy to get a low rate. It's the mortgage contracts that are tricky. There are 50+ lenders in Canada, and the differences in their mortgage contracts are vast. The differences in their mortgage rates is probably no more than 20 basis points. Consumers should expect a great rate, but some of those contracts contain serious design flaws. In our office, we call them Ford Pinto mortgages. You may remember the Ford Pinto. It was that economical car built in the 70s. Ford was competing with Japanese car manufacturers, trying to build a car for less than 2,000 bucks, and everybody was price sensitive. They had the Vietnam War, Watergate, and the oil crisis stressing them out. Ford's solution, the Pinto. Ford sold 3 million of them in the 70s, but the car had a serious design flaw. Basically, if you were rear-ended, the neck of the fuel tank filter could break off, causing the fuel tank to rupture. This meant that in an accident, there was a good chance your Pinto would burst into flames. The crazy thing is, an internal Ford memo at the time indicated the part to fix the problem would have cost only $11. Ford decided to skip the part, figuring the cost of the insurance claims would be much less than replacing the part on millions of cars. They essentially manipulated the manufacturing process. Consumers wanted cheap cars. Ford decided, let's give them what they want. Fast forward to today, and we have our own news stressing us out. The US is bankrupt and won't admit it. Europe's a mess, and governments, including our own, have been printing money at unprecedented rates. They call it quantitative easing to make it seem less sleazy. Banks are facing the same dilemma Ford faced in the 70s. Consumers are obsessed with the lowest possible mortgage rate. One of the ways that they get these low mortgage rates is they manipulate the terms of your contract. Did you know that there are mortgages in Canada where the only way out of that mortgage before the end of your term is to sell to a complete stranger? In my opinion, that is a serious design flaw. Want my advice? Don't buy a $500 car unless you know a really good mechanic, and don't sign that mortgage without reviewing the contract.